You've heard of, or maybe even seen parts of the book, Rich Dad, Poor Dad, right? Well, you don't need to know the difference between a stock and a bond to have heard of Rich Dad, Poor Dad. It's one of those books people recommend like gospel, whether they've actually read it or just heard someone say that it's changed their life. But was it really that life-altering? Let's see. The truth is that even people who avoid personal finance like it's a math test still know the name Robert Kiyosaki. He's been the guy selling financial freedom before it was cool. Long before TikTok money coaches and YouTube side hustle kings existed, there was Kiyosaki, suit jacket, bold claims, and a chalkboard full of dreams. But here's the uncomfortable truth. The advice was never that good, and it aged like milk. So was he a visionary or just early to the game? Depends on who you ask. Some swear by him, others, they just want their $500 seminar fee back. See, Kiyosaki didn't just write one book and call it a day. He built an entire machine. And by that, we obviously mean the 26 plus books, high-ticket courses, flashy seminars, and a whole generation of believers who genuinely thought they were one mindset shift away from millions. Ever feel like someone's selling you the dream just to sell you more dreams later? You're not wrong. Kiyosaki was ahead of his time in one very real way. He understood the power of personal branding before the internet made it a career path. But Kiyosaki was never really a teacher. He was a performer. His biggest skill wasn't real estate or investing. It was making basic, obvious ideas sound like life-altering wisdom. Don't buy liabilities. Track your spending. Use debt to your advantage. Solid advice, sure, but groundbreaking? Not even close. But that's the trick. He didn't say much, but he said it like it was a secret nobody else knew. And people... Why? Because financial advice sucks. It's full of jargon, it's dull, and it often ignores the simple truth. No one-size-fits-all advice actually fits. So when someone comes along and says, forget school, leverage debt, be your own boss, well, yeah, it sells. He gave them a story. Two dads, one rich, one poor. One who followed the system and ended up broke, and the other who thought outside the box and got rich. If that kind of thinking flips a switch in your brain, hit like and subscribe. It might just be your first smart investment. It's a perfect narrative for anyone tired of working hard and getting nowhere. And it worked. Rich Dad Poor Dad became a global bestseller. A fixture on bookshelves, from college dorms to retirement communities. It promised simple truths and a better path. But the simplicity was the point. Have you wanted to believe in something so badly that you stopped asking if it's true? Well, welcome to the Kiyosaki effect. The real genius of Kiyosaki's message is how it made the reader feel smart just for reading it. He bashes formal education, says that the school system is broken, and implies that if you struggled with money, it's not your fault. You were set up to fail. It's a seductive message, especially for those who never went to college, regret the degrees they did get, or feel stuck in dead-end jobs. And that's what makes it more than a book. It's a validation machine. Validation isn't guidance. Kiyosaki's advice, avoid liabilities, embrace risk, use debt, invest in real estate, it sounds smart until you try living it. Want wealth? Take on debt. Freedom? Start a business. Passive income? Use others' time and money. But without context or risk management, it's less of a plan and more of a fast track to financial chaos. One of the most persistent questions about Rich Dad Poor Dad is this: who exactly is the rich dad? Yeah, he's probably fictitious. Investigators couldn't find any record of Rich Dad, and Kiyosaki admitted he made it up as a symbol. And you know what? That wouldn't be a problem if the advice held water. But here's where things get dark. Kiyosaki doesn't just encourage smart investing, he promotes leveraging debt, buying risky assets, and dishing traditional education. He sells confidence, not caution. Is it still confidence if you can't afford the consequences? And that's just the start of the unraveling. Because even if Kiyosaki's early material was just motivational fluff dressed up as insight, his later ventures sailed into far more questionable territory. After the books came the seminars, free workshops to get people in the door, followed by upsells for premium events. People walked in looking for financial freedom. They walked out with thousands of dollars in credit card debt and a binder full of vague strategies. It's a familiar model. Tease people with just enough information to make them feel like they're missing out on a gold mine, and then charge them to dig. Reports from attendees describe classic high-pressure sales tactics. Speakers who spend more time selling the next seminar than teaching anything useful. Awful, ain't it? One couple paid $15,000 for a 3-day training session. Others were encouraged to take on debt to afford the courses. Kiyosaki has distanced himself from some of these events, claiming they were run by third parties. But the brand is his. The machine runs on his name. One of Kiyosaki's core teachings is that debt isn't something to fear, it's a tool. And sure, in the hands of experienced investors, leverage can unlock serious returns. But for an average person trying to follow his advice without the safety net of millions in book sales, it's a loaded gun. He glamorizes risk without showing the downside. He talks about buying rental properties with borrowed money, becoming a business owner in name only, and using debt to scale. It's easy to make these ideas sound sexy, but in the real world, this stuff can go sideways fast, especially if you're trying it in, say, 2007, right before the real estate market imploded. Kiyosaki's most dangerous idea might be that real education is overrated, that risk is always rewarded, and that playing it safe is for suckers. It's just a blindfold, ain't it? Kiyosaki also sells an idea called the Cashflow Quadrant, which breaks down earners into 4 categories: employees, self-employed, business owners, and investors. The message he's desperately sending out: the first 2 are suckers, the last 2 are winners. Real freedom, he says, comes from owning businesses and collecting passive income. And the problem? Most businesses aren't passive. They're a grind. They take time, capital, and a little luck. Even among successful startups, few ever grow to the point where the founder can walk away and let others run it without their input. But Kiyosaki glosses over that. He tells readers to build income streams that run without them, but skips over how hard that actually is. And that's because he's not in the business of teaching financial literacy. He's in the business of selling aspiration. One of his lesser-known but wildly influential books, The Business of the 21st Century, reveals just how deep the rabbit hole goes. In it, he pitches a new angle: network marketing. You know what that means. MLMs, Herbalife, Amway, USANA, selling overpriced vitamins and hope to friends and family. Now, Kiyosaki doesn't outright shill for any particular company. He's slicker than that. His book is handed out like the gospel by MLM recruiters. He's built himself into the brand behind the brand. That's the real genius. He never has to touch the product. Just bless it with the rich dad halo and watch the checks roll in. When everyone's selling something, how do you know what's real? He tells people to ditch the rat race, but the alternative he offers is a multi-level pyramid where 99% of participants lose money. The only consistent winners are those selling the dream from the stage, in the book, and on the training DVD. If you're wondering where Kiyosaki fits into that structure, the answer's obvious. He's at the top. It's plausible deniability at its finest. And while the people selling protein powder and skincare kits often end up in debt, Kiyosaki gets speaking fees and bulk book sales. If you think he stops at real estate and MLMs, think again. Kiyosaki has since pivoted into anything with hype and low barriers to entry: cryptocurrency, gold, even drop shipping. If there's a market for financial anxiety, he's there to sell reassurance. When crypto was booming, he claimed Bitcoin would hit $10 million. When inflation fears rose, he started talking about gold mines, claiming to have bought the biggest gold mine in America. Really? Not quite. The mine he mentioned isn't even close to the largest, and he's not a major player anywhere.
Biggest gold mine in America last July. It's in Utah.
So you're literally mining your own gold.
Kiyosaki's real business? Selling stories, books, seminars, high-ticket coaching. It all sells because real advice sounds boring. People want shortcuts, not slow climbs. They crave the promise of skipping the grind and jumping straight to rich. And Kiyosaki gives them exactly that. And he wraps it in just enough truth to make it hard to argue. I mean, what's more seductive than a shortcut, especially when the long road looks impossible? The irony? Kiyosaki did escape the rat race, but not by following the advice he gives. He got rich by selling advice, over and over again. Still, this isn't about hating on Kiyosaki, but are you really learning how to get rich? Or are you learning how to act like it? Comment down your thoughts and hit the like button to show us some support. And if you're into this kind of stuff, definitely hit that subscribe button, because there's more following that you won't want to miss. Catch you in the next one.